Welcome to FactsNotForecast, your daily edge in the stock market. Facts, insights, and opportunities you won't hear anywhere else. Today, we are taking a necessary deep dive back into ASML. If you've been watching the semiconductor space, you know this name has just been, well, on fire. We actually first talked about ASML back on July 25th. It was trading around €650 then.
Yeah, I remember that. Quite a different picture now.
Exactly. Since then, demand for their chip-making machines, it's only grown stronger. And now you have analysts talking about ASML potentially rallying towards 900, maybe even €1,000.
Right. And a big part of that story is the massive backlog of orders they're sitting on. Gives them incredible visibility.
So that's our mission today. We want to unpack what's really driving this breakout momentum.
We need to look at that huge order book, why it gives them that revenue certainty for years.
And scrutinize those analyst calls, right? Why the aggressive targets, that 900 to €1,000 range.
And define ASML's unique spot in all this. The whole arms dealer idea in the AI supply chain, it gets mentioned a lot, but what does it really mean here?
Definitely. And the market's certainly buying into it. The stock just closed at $932.15. That was September 19th.
Yeah, impressive level.
But it's the speed of the move that's really striking. I mean, the one-month return, 25.4%.
Wow.
Compare that to the S&P 500, which did, what, 4.2% in the same period?
Yeah, that's significant outperformance. It tells you something specific is happening with ASML. It's not just riding a general wave.
Exactly. This feels like acceleration based on real fundamentals.
It absolutely is. And, to really get that, you have to start with their technology, their MOAT. People call ASML the linchpin in the supply chain. Sounds a bit like jargon, maybe?
Yeah, a little generic.
But it's not generic when you realize why. They are literally the only company in the world making these extreme ultraviolet lithography machines, EUV machines.
Only one. No competition there.
None at that bleeding edge. For the most advanced chips, you need EUV. Period. No substitute.
So that arms dealer analogy really clicks then. They don't make the final AI chip, but they sell the essential tools needed to make any advanced chip.
Precisely. Chip giants like TSMC, Samsung, Intel too. They simply cannot produce their most advanced chips without ASML's equipment.
Okay, so for someone listening, why is EUV lithography the absolute must-have?
Yeah.
Why is it so crucial for the chips powering AI?
It boils down to, well, physics and incredible precision. We're talking about shrinking transistors down to just a few nanometers wide. Tiny.
Almost hard to imagine.
It is. And EUV uses this extremely short wavelength light. It's actually soft X-rays generated in this incredibly complex way involving vaporizing tiny drops of tin with lasers.
Wow, okay.
To etch the patterns onto the silicon wafers. Without that super short wavelength, you just physically cannot draw the lines small enough or close enough together for these cutting-edge AI processors.
So they're basically the gatekeepers. You can't get to the most advanced nodes without passing through ASML.
That's a good way to put it. Gatekeeper technology.
And that patented dominance, it just immediately links them to the huge spending happening around AI infrastructure.
Right. It fundamentally changes how you categorize them as an investment. It's not just, selling complex machines anymore.
Yeah, it's not just cyclical industrial equipment.
Exactly. The research we looked at confirms this shift. ASML is now often tagged specifically as an artificial intelligence stock. Why? Because AI demand is seen as a core structural driver for them now.
Makes sense. Every big player, Nvidia, AMD, the cloud companies, they all need more powerful chips.
And faster. And more efficient chips, which means the most advanced manufacturing processes.
Which leads right back to ASML.
But technology never stands still, right? Especially in semiconductors. So they have this monopoly today. What are they doing to keep it 5 years, 10 years down the line?
That's the key question. And they are absolutely not resting on their laurels. They're constantly pushing the boundaries themselves.
Moving the goalposts, as you said. Yeah, exactly. Making it almost impossible for anyone else to catch up, given the sheer complexity, the R&D costs, the scale needed for EUV. And we see that in their pipeline. The sources mention their next-gen tools, the NXE.3800OE systems, and especially the move to high-NA EUV.
High-NA. Okay, that sounds technical.
Yeah.
What's the big deal there? Why are chip makers lining up for those machines?
High-NA stands for high numerical aperture. Think of it like a more powerful lens on a microscope.
Okay.
It allows for even finer detail, even smaller tighter chip designs. It's the tech that will enable ASML's customers to keep Moore's law going, essentially, to keep packing more transistors onto chips.
So the next generation, like 2 nanometer chips and whatever comes after.
Exactly. Those rely on high-NA tools. So by developing and rolling out high-NA, ASML is reinforcing its own dominance for the next wave of technology. It justifies the premium price they charge.
Okay, so the tech dominance underpins the pricing power. Makes sense. Let's switch gears a bit to the financials, because that's really fueled this recent stock surge.
Right.
We mentioned the 25% jump in a month. Year to date, the stock's up, what, almost 35%.
Yeah, 34.49%. Strong performance.
And this isn't just market hype. You're seeing analysts react, right? Upgrades coming through.
Absolutely. It feels like tangible performance backing it up. UBS upgraded them from neutral to buy just earlier this month, September. New Street upgraded back in July.
It's a momentum building there.
Yeah, and I think investors are getting more comfortable with ASML's financial strength, especially how it seems to buffer them from the usual, wild swings in the chip sector.
And the key piece there, which comes up again and again in the sources, is that massive order backlog.
Yes. That backlog is crucial. It's not just large. It gives them visibility for years out, multi-year visibility.
How important is that, really?
It's arguably the most critical metric for stability. The research uses phrases like strong bookings, robust backlog, and it specifically says this backlog will support the company, even if there are geopolitical issues or a dip in the global economy.
Like a buffer.
Exactly. It's essentially their guaranteed revenue stream for the next, say, 3 or 4 years already locked in.
And the numbers back that up. That Q3 2025 estimate for net bookings, around $6.49 billion. That's up over 16% year over year.
Huge number. And that's committed cash, essentially. It smooths out those peaks and valleys that normally give semiconductor equipment investors nightmares.
Right. It definitely changes the risk perception.
But we do need to address the elephant in the room there, geopolitical risks.
Yeah, good point. Especially with the U.S. export controls on advanced tech to China. How does the backlog provide comfort against that kind of volatility?
That's a fair challenge, and ASML definitely operates within those global restrictions. Certain advanced tools can't be sold to certain places.
So how does the backlog help them?
Well, the way the sources seem to frame it is through diversification and just the sheer scale of demand from other major customers. Think TSMC, Samsung, Intel, mostly operating outside those restricted zones.
Oh, okay.
Their demand for the most cutting-edge EUV tools is so overwhelming right now, driven by AI and high-performance computing, that it more than fills any potential gap from restrictions.
So the backlog is mostly built on orders from foundries in, say, Taiwan, South Korea, the U.S., Europe.
That seems to be the implication. The leading-edge demand, which needs the most advanced, most expensive machines, is concentrated in those areas. So the backlog provides resilience, not because it ignores geopolitics, but because the global demand from unrestricted regions is currently so strong it outweighs specific market limitations.
That makes sense. It shifts the focus to where the absolute cutting edge is being built right now.
Okay, let's look deeper at the balance sheet itself. That stability isn't just orders, it's financial structure, too.
Oh, absolutely. Their balance sheet is incredibly strong, very disciplined. You look at their debt, very low profile. Debt-to-equity ratio is only 21%.
Which is remarkable for a company that has to spend billions on R&D and building these massive machines. It really is extremely conservative. It means they have huge flexibility. They're not overly reliant on borrowing, not as sensitive to interest rate changes, perhaps.
And they can keep funding that critical R&D, like High-NA, without feeling financial pressure.
Precisely. And the debt they do carry, it's managed exceptionally well. Operating cash flow covers their debt by over 300%. 302.4% to be exact.
Wow.
That's just fantastic coverage. And liquidity, also great. Short-term assets, about $26.7 billion, easily cover both short-term and long-term liabilities combined.
So basically a fortress balance sheet.
That's a perfect description. Built for the long haul, built for dominance.
Okay, so you combine that fortress balance sheet with the tech monopoly.
Yeah.
It leads us straight to the valuation discussion and those big price targets. The stock's already over $930. The average analyst target is actually a bit lower, around $857 or so.
Yeah.
But the market seems focused on that higher potential, near $1,000 or $1,000.
Yeah, I think the focus is shifting towards those high-end targets because they reflect this changing understanding of ASML's long-term potential.
Like who? Any specific examples?
Well, We saw Bank of America recently raise their target to 941. That's pretty close to the highest analyst target out there, which is around 943.
Okay, so pushing towards that upper bound.
Exactly. And these aren't just based on hoping for a quick cyclical recovery. They seem rooted in expectations for sustained, structurally higher growth than maybe previously thought.
So what are the actual growth forecasts saying? What kind of profitability are we looking at?
The consensus numbers are pretty compelling for the next 3 years. Earnings forecast to grow about 9% per year. Revenue around 7.3% per year.
Solid growth numbers.
Solid, yes. But here's the number that really makes you pause. The forecast for their future return on equity, ROE.
What?
It's projected to be 47.8%.
Wait, 47.8% ROE.
7.8.
That's huge for any company, let alone one making massive industrial equipment.
It is astonishingly high. It really speaks volumes about their pricing power.
Unchecked pricing power, almost.
You could say that. I mean, for context, a really good, profitable industrial company might aim for ROE in the high teens, maybe low 20s.
Yeah.
Getting close to 50%.
Yeah.
That suggests they have extraordinary leverage over their customers. They generate massive profits relative to the shareholder equity involved. It's a direct result of that monopoly position we talked about.
The customers just have to pay up for the essential tool.
Seems that way. For the leading edge, yes.
You know, that kind of profitability almost makes ASML feel less like a typical cyclical tech stock and more like some kind of specialized essential utility for the digital world.
That's an interesting way to frame it, a necessary utility for modern tech.
Okay, lastly, let's bring in the macro picture. We got the company specifics down, but this big rally didn't happen in a bubble, right? There seemed to be some favorable winds blowing.
Absolutely. The timing isn't accidental. We saw news specifically linking ASML's gains to a broader chip-led technology rally in Europe. And that rally got a boost from signs that, the Fed and maybe other central banks might be looking at rate cuts down the line.
Right. Why is the prospect of rate cuts such a catalyst for a stock like ASML specifically?
It comes down to valuation, especially for growth stocks. ASML is a company whose biggest profits are expected further out in the future.
Okay.
When interest rates or the expectation of future rates go down, the present value of those distant future cash flows goes up, discount rates fall.
The discounting effect.
Exactly. So high-quality growth companies with long-term visibility, like ASML with its backlog and tech lead, suddenly look much more attractive compared to, say, bonds or slower growth companies when rates are expected to fall. Capital rotates towards them.
Makes sense. And we also saw industry partnerships giving the stock a lift, too, reinforcing that infrastructure idea,
Yeah.
like the Nvidia Intel deal.
Yes, that was interesting. News about Nvidia potentially working with Intel on custom data center chips. The headlines explicitly said this boosts ASML's prospects.
Because?
Because it doesn't matter who wins the chip war, whether it's Nvidia designing them or Intel manufacturing them or TSMC making them.
Right.
They all need the most advanced manufacturing processes to compete, especially in AI and data centers. And those processes depend entirely on ASML's EUV machines. ASML wins regardless of who gets the final chip contract.
The ultimate enabler.
Exactly, the enabler for the whole AI ecosystem. That's why it commands such a premium valuation.
Okay, let's kind of wrap this deep dive up then. It feels like the core story here, driving ASML towards that $100 and euro mark, is this really powerful combination. You've got unmatched pricing power from the EUV monopoly that's backed by this incredibly solid financial structure, especially the huge backlog giving years of revenue certainty.
Right, the visibility is key.
And all of this is turbocharged by the massive, accelerating global spending on AI infrastructure. ASML is just indispensable to that. So analysts are rewarding this unique mix with these really aggressive targets.
Yeah, it's a rare combination. Finding that level of tech dominance plus the balance sheet strength plus direct exposure to arguably the biggest tech trend right now, it's pretty unique.
Okay. Well, let us know in the comments if you would like another episode on ASML when it releases its earnings in October.
And maybe a final thought for you to chew on, building on that utility idea. Given ASML is the world's only EUV supplier, and we're seeing forecasts for that near 48% return on equity, does this near monopoly status actually start to outweigh the traditional worries about chip cycles and even geopolitical risks? Does it become almost a must-own piece of global infrastructure?
Something to think about. Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.